So, Angela Merkel made it with her CDU-CSU party, winning 33%, the SPD 20.5%. But I think more of the headline coming through from the third placed party, the AfD, Alternative for Deutschland, 13% or so. So AfD coming third and Angela Merkel losing share to that right-wing party. But the second biggest party, the SPD, has ruled out being in a coalition with Angela Merkel's political movement. So what does this mean for the markets? Karim Chedid joins us now from BlackRock. And I think the opening question really has to be is where does German politics go here? We'll talk about the markets in just a minute, but I think it's important to talk about the way in which German politics is beginning to shape up.
So it's an interesting outcome with a couple of surprises. First is that while Angela Merkel has managed to win and her party secured the largest amount, it looks to be that she's going to be on top of a very fractious government relative to the previous government, which was already a coalition. It's going to be an even more fractious coalition and a grander coalition that will have to bring in more parties together. And if I think about that first point there, who is she going to have to speak with to form a coalition government? It's neither the SPD nor the AfD, so neither of the two parties that secured votes after the first that you just spoke about. It's likely going to be the FDP, who are slightly at odds with the Greens, which is the other party that she will have to speak with, on a couple of key issues like climate change, environment, like immigration, like focus on Eurozone integration or away from Eurozone integration. So it seems like she's going to have to speak to parties that are at odds on key issues to form a coalition government, which is not an easy job. The second surprising point from the election is the AfD result that you mentioned, given that Merkel actually lost some ground to this party that is quite a protest movement.
What about relationships with France going forward? Because with the French election of Emmanuel Macron, there seems to be a certain momentum going on there. I know there's a bit of an altercation at the moment with the unions in France. But what about the relationship between France and Germany, the big two behemoths of the EU?
So when I think about the Franco-German axis, this is really the focus on Eurozone integration. Macron and the leader of the SPD, the party that came second in the German elections, both spoke previously about the concept of a Eurozone finance minister. That would be a unified minister that brings together the finances of Eurozone. So a key step towards fiscal integration. Now with this German result, it's not very clear how this will impact such plans of closer Eurozone integration. Because of the fractious government in Germany, Merkel may have to look more inwards, try to resolve some of these issues that led to the large protest turnout before she speaks about Franco-German integration.
So where does this leave us then when and if the next issue comes up, whether it's Italy? Of course, we've got the Italy elections, I think, have to be held by May next year. Of course, we've got Catalan referendum next week. The next big event for the euro, where there has to be some sort of good relationship between those two, the axis, the Franco-German axis. Where do we stand then for the next event that could well destabilise the eurozone if there's not a one voice coming through from those two?
So I think the one voice is still there. Where we are today is probably better than a year ago with who will be in charge in Germany and in France with respect to fiscal integration and unified Eurozone voice. So I think the unified voice is still there. And I don't think it's going to be destabilizing for the events that you mentioned, like Italy or Catalan. Where net things have gotten a little bit less promising are on the topic of reforms. So if Merkel has to do some work inwards, then her focus on reforms with Macron at a Eurozone level will probably slow down a little bit. So it won't matter in the near term, but in the long term, in terms of the pace of Eurozone reforms, it may be less promising than we were thinking earlier this year.
Yeah. Okay, let's take a look then at what all this means to the markets, because if we don't have a full government in Germany for some are saying several months, what about the trade on the euro dollar? Because we've seen the euro trade bumping along the bottom of this channel that we've been in. What's your best case for the performance of the euro?
So the euro has strengthened quite a bit year to date, and part of it is upbeat sentiment around political risk in Europe, especially relative to the UK and the US. But also part of it has been the expectation that the ECB is going to announce some form of tapering in Q4 this year, possibly the next meeting in October, last week of October. So that euro strength could now start to come under pressure if that concept of really stable European politics comes under pressure a little bit with the German result. But also it could come under pressure if the ECB tapering announcement is not as pronounced as investors were expecting. Couple that with the dollar, when you're looking at the euro-dollar cross, and you land in a situation where US inflation has been doing much better than Eurozone inflation, and there's a lot more reason for the Fed to continue on its tightening path, given the shape of the US economy at the moment and how well it's doing. And then the euro-dollar cross starts to come under pressure, partially because of the euro component, but also partially because of the dollar strengthening on central bank policy divergence.
Okay, well, while we're talking about the dollar, I want to talk about the German equity markets in just a minute. While we're talking about the dollar, I want to take a look at the dollar basket, because this was certainly in focus last week when we saw the FOMC decision. They're talking about gradual approach to tightening monetary policy, and we know now that they're going to be unwinding some of that QE as well. Dollar basket has been under a lot of pressure this year as the euro's risen, of course the dollar down. Your best case is that this is going to see more weight added?
So that this will see some form of reversal because of the central bank policy divergence. So the inflation dynamics of the US and the Eurozone have been diverging. The US is seeing some inflation come through. We saw 5 CPI misses in the US earlier this year, but the latest reading was a beat. And a lot of focus has been on the wireless component of the US CPI, which had weighed on the numbers for accounting change reasons. But now the base effect of that drop is starting to come out of the numbers. As US inflation starts to come through, we expect the Fed to continue its hiking track, whereas the ECB may have to remain accommodative for longer. Yes, they will taper, but they will probably taper just in the government bond space, and they are not hiking rates anytime soon. As that divergence starts to come through, we expect it to put some upward pressure on that dollar basket.
Yeah, and of course as the euro comes down, some of the pressure's released, isn't it then, for these companies that have been complaining about the fact that the euro makes it uncompetitive for some of the businesses in Europe to export. So I guess that is, it adds to the argument I know that BlackRock has been putting forward that it is a good place to be. Europe's a good place to be in terms of indices and equities.
Yes, in terms of equities.
So that continues, does it?
Yes, that investment case for Eurozone equities stands. Yes, we had a bit of a wobbly German result, but it doesn't change our base investment case that is good for Eurozone equities.
So looking at the German DAX here, the record highs that we saw back on the 20th of June, you think that's an easily achievable target?
It is seeming like, if you think about the earning outlook for the Eurozone that has been doing well, including Germany, if you think about the ECB, yes, tapering, but remaining broadly in accommodation, especially relative to the Fed, these are all factors that should support the equity market, so which includes the DAX index that you show.
Yeah. Just one other thing, just looking further ahead, as I said, we've got Catalan referendum, assuming it goes ahead on Sunday, and at some point the Italian elections. What do you see as the big events now for the ECB and for the Eurozone?
So the Catalan vote you mentioned is of course important to monitor if it goes ahead, especially because it carries significance. Just as with the UK's EU referendum last year, these types of votes do carry significance for other cases. For example, in Spain alone, what happens in the Catalan region matters for the Basque County. And then broadly in the Eurozone, it matters for other regions on the continent that have separatist sentiment and separatist movements, so it matters a lot. And then if we think about the Italian vote, it will matter especially the performance of the five-star movement. Now some people say, some market participants have said, well, the five-star movement has been ruling in Rome at a mayoral level and they haven't been doing a particularly good job in terms of sentiment. The popular sentiment is not in their favor with regards to the work that they're doing there. So perhaps it's not as negative as we think, and perhaps it's not as big of a risk event as we think. And then we have the ECB meetings in late October. it'll matter to see, first of all, how the ECB tapers. Is it just government bonds? And the language around tapering and around accommodation will matter a lot for markets.
Yeah, okay. And of course, in the December FOMC meeting as well, which some are saying is still live.
It's still live, and it's we're expecting a rate hike in December.
Yeah. Okay. Look, Karim, we've got to leave it there. But thanks indeed for joining us. Karim Chedid is from BlackRock there with commentary in the wake of the German election result at the weekend, looking potentially there, according to BlackRock, for a weaker euro, stronger dollar coming through from other references in the market, and also potentially more upside for the German DAX.